Some homebuyers feel like they are being punished for playing by the rules. Starting next week, those with good credit scores actually could face a higher mortgage fee. A new federal rule will overhaul something called the loan level price adjustment. It means that monthly mortgage payments for buyers with good credit scores could rise by over $60 a month, while riskier borrowers will have their fees reduced.
For many, homeownership is part of the American dream, something Andrew Yeager with Bank of England Mortgage has been a part of for more than 2 decades.
And I hope every family gets to accomplish that because it is the #1 wealth creator for middle-class families. So everybody starts at a base interest rate, and the higher or the more risky you are, the higher your interest rate becomes.
The idea is to make it so more people can afford a home, but there is a downside.
When we do the right thing and we do everything we're supposed to do, unfortunately, we're getting penalized.
Real estate agent Ray Lopez points out the new structure will actually force those with good credit and a larger down payment to pay higher fees to subsidize the other borrowers, something he's never seen before.
It is 100% backwards, in my opinion.
Good morning, everybody. Today is May 1st, 2023 here in beautiful Orlando, Florida. Today, we're going to talk a little bit about the hot subject of the day or the week, and actually probably the first quarter of this year. It's actually called loan level pricing. So it's an adjustment that Fannie and Freddie are starting today. And basically what it is, and you're going to hear about this more and more on the news, it's going to be penalizing people that have better credit, people that are putting more money down. And what it's going to do is it's going to help offset the cost of people that have a little bit lower credit and aren't putting as much money down. Most people are asking, why would the government do that? Well, what the government's trying to do is they're trying to stimulate the people that are maybe, that don't have as good a credit, that might not have as much money. The clients that fall into that category typically pay higher rates. So what they're doing, them being this adjustment, it's basically trying to level the playing field. I've had several clients call me after they've seen maybe a news story about this, call me up and say, hey, Ray, what's going on? Why would the government penalize me for having good credit, for making or putting more money down? Well, the answer to that is, it's unknown. I understand why the government's trying to do it. And for a certain sector of the community, it actually is good. And then for a certain sector of the community, it's actually bad. The hard part is, and this is where NAR, the National Association of Realtors, kind of sits, is, I guess, as a body of realtors, we're trying to figure out, since interest rates are already twice as much as they used to be last year, why would you go and charge more money to generate a loan? And this isn't a rich poor thing. This is more people doing the right thing all their lives to buy a house are now paying more because they did the right thing. And that's why a lot of people aren't happy about this. So as your realtor, I will always bring you the most current information. Hopefully you got a little bit out of this. And you know what's great is we're going to talk more and more about these type of things, everything real estate, every week. And if you have any questions, do me a favor. If you will you'll subscribe so you can see what we put out every week. And more importantly than anything, comment, because I would love to see how you feel or what you think about what we're talking about. Have a wonderful day.